Today is Monday, November 1st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADM Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Alan, let's start with the financial markets this morning. What will the Federal Reserve say at its November 3rd policy meeting this Wednesday?
Okay, well, most likely they will keep rates unchanged at 0 to 25 basis points. But there is quite a bit of anticipation that at the upcoming meeting that they will announce details of a tapering of their $120 billion a month in asset purchase plans. So those details will be closely scrutinized. And also we will have a press conference from Fed Chair Powell. So it's really the tapering that is in focus and what those details might consist of.
Alan, will reduced accommodations from the major central banks reverse the uptrend in stock index futures?
No, I don't think so. And in fact, we've already seen central banks withdrawing accommodation to one degree or another, and yet stock index futures continue to advance. Even today, we did see some new record highs. So I still think that there's still plenty of accommodation left in the banking system and will be even after the Fed announces a tapering. So I think we are likely to see more of the same. Higher prices, I believe, are in store for stock index futures in spite of what we are seeing from some of the major central banks.
Finally, Alan, what's your take on the interest rates right now, in particularly the 30-year T-bond?
So the bonds have come under pressure in anticipation of a tapering announcement, which, of course, we will probably see at the Wednesday meeting. But I think once that meeting is out of the way, traders will then start to focus on what is happening in the global economy, starting to see some evidence recently that there may be a slower rate of growth. So I think that will become more and more of an issue, probably more so next year than this year. So I think the tapering situation from the Fed will probably be, I believe, a sell the rumor, buy the fact situation. So after the meeting is out of the way, I think we can see a new leg higher in the 30-year Treasury bond futures.
Thank you, Steve. Let's take a look at the grain markets. Last week, both KC and Minneapolis wheat made new highs. Oats made new highs. Matif wheat futures made new highs. Also, Canadian and Matif rapeseed made new highs. Why, and will this continue?
This seems to be a continued trade because of the lower Canada crops. There doesn't really seem to be, because of their lower crops, a lot of extra oats for them to come into the United States. And a lot of our oats that we consume on food comes in from Canada. We also note that they had a low spring wheat crop, so their exports will probably be limited, putting our export market maybe in place for some little bit more trade. And then their canola crop was down quite a bit, and so we also had some lower canola crops in Europe. All these markets are continuing to trade higher, real thin volume, thin markets with not a lot of selling. And I expect those markets to continue to trade higher. It's also kind of rolling over into the corn market and a little bit to the soybean oil market, along with the fact that energy prices also continue to trade higher.
Steve, looking at the weather and the crops in South America, the weather has been favorable. Will this offer resistance to corn and soybean futures here in the U.S.?
We really thought it was going to be tough to trade over the 12.50 in the January contract, and also maybe 5.60, 5.70 in the corn contract, because there's a pretty narrow window. They'll start harvesting in 30 days, and in January, the South American soybean prices are a 65-cent discount to U.S. And we really haven't seen the China buying of beans and corn that we were hoping by this time. So I think as long as the weather stays favorable down there, it will offer resistance to the marketplace. Our weather guy, though, is watching pretty closely that in 2 weeks, La Nina could kick in and dry out Argentina and southern Brazil. So this is a real critical time for South America as far as production is concerned.
Steve, next big USDA report is next week on November 9th, I believe. Will it be bullish or bearish?
We think we're leaning on to a bearish report. In the beans especially, they could raise the crop 25 million bushels. They could take exports down 90 million bushels, and it could be a carryout over 400 million bushels. In the corn, the trade is looking for about a maybe 50 million bushel increase in the crop, but they also look for ethanol to be up 150, feed up 50, and exports maybe 100, which would give us a carryout about 1,200 or 1,250 million bushels. The problem is the USDA is really slow in making these changes, so it could be disappointing to the bulls that are buying into this report, thinking it's going to be a bullish corn report. And wheat, I think they could actually lower wheat export numbers and raise the carryout. Still a low carryout, but it also could be a little negative to the wheat.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.